Okay, well, good evening, everybody. Hope everyone's okay. Hope everyone is good. Um, yeah, so Bitcoin's price. To be honest with you, I sort of set out as I usually do. What we're going to talk about today. There's a couple of things, obviously, we're going to talk about, but the reality of it is, when I looked at sort of the charts from last week and from this week, we're kind of still in that limbo zone at the moment. Yes, price has fallen, although definitely not as bad right now as what it was earlier on today. So potentially maybe some short-term relief from that. But we're going to have a look a little bit, obviously, with Bitcoin's price. There's some geopolitical kind of events at the moment. And whilst I still think TA is king, we can't ignore, fundamentals as strong as those. So we will certainly look at those too. Someone asked me to just comment a little bit on trading, which we will also do, and we'll look at Bitcoin's price and go from there. So without any further ado, and hoping everybody can see and hear me, let's just crack straight on. Right, Bitcoin's chart, 3-day time frame. We'll blow it up a little bit bigger so everyone can have a look. But I think today's price action, it's come down, it's hit this level perfectly, really. It's where the sort of cascading, I'm not going to call it a capitulation event, but where that cascading fall sort of ceased at around about 62,500. We came back down, we wicked to it, we've had a fairly decent bounce from that. I'm going to go and talk on a little bit about this at the moment. But this feels, we're ranging out. We've been in ranges before. We like to play support and resistance within those ranges. And to be perfectly honest with you, maybe this is an actual ideal opportunity for some short-term relief. That relief may be going all the way up to 72,000. 70,000 is probably a little bit more realistic with that, but let's not rule out 72,000 continuing within the range, but actually a fairly decent, it's going to be about 12%, 13% recovery for Bitcoin over that period. I think that's something to look out for. We can have a talk about that a little bit later on as well. But as we sort of spoke about last week, if we lost that 66,200, if you remember the figure we were talking about, then we were going to go back down to 62.5. I think just playing on those big picture there, that's where I'm seeing it. There is still an element of a battle zone around here. Obviously, we've still got 2.5 days left of this candle. Yes, we have come a wick down into it. But with some of the geopolitical elements that may go on in the future, or in the near future, perhaps we could see further falling from that. So I'd still be having a look at that 62,500 level. But I must admit, considering maybe a potential short-term long on Bitcoin around these levels, which I'll explore later on with you. Bitcoin dominance. Now, this one sort of baffled me for the last couple of weeks. I'm amazed to think that Bitcoin's actually falling a lot harder than the rest of the altcoin market, particularly as we're sort of ranging sideways. But it's been yo-yoing a little bit over the last few weeks. So that's 60,000 down to around about 58.5. But the reality of it is, and actually I can't believe I didn't really cotton up on this. Speak a little bit louder. Okay, thank you. I will try and do that. So let's get that mic a bit closer. Let's turn the volume up there. Hopefully that's a little bit better for you there, Reese. But let me know. Also, everyone else, let me know if I'm deafening you. One of the things I probably should have cottoned on a little bit earlier was, why is Bitcoin dominance dropping? Well, perhaps it's actually because USDT dominance is climbing. So it's not that Bitcoin is bleeding into altcoins as such, but actually what we're seeing here is more people are fleeing towards stable coins. And again, when we go and have a look at some of the news things or some of the sort of big picture TA that's out there, that could well be a player. But I do, tip my hat to the fact that we had this sharp drop down from Bitcoin dominance, and we can kind of see it correlates with the blue line here, which is the rise in altcoin dominance. That's still staying fairly high. So I think in terms of a metric, it's not that we're experiencing an alt season. It's actually that people are fleeing to the relative safety of stable coins. And again, in total too, this is starting to make a bit more sense as well. That's falling as well. We've kind of come down, retested some of those levels. This one, potentially, we can't rule out a potential double bottom on the 3-day time frame here as well. I just think it's going to do kind of what Bitcoin's done. Let's give it that W in terms of just work this range. And we may see a sort of an impulsive move back up to around about that $1 trillion level as we see some of the altcoins start to slightly recover. And then we move on to a bit tensor 3-day time frame. I mean, it feels like a while ago. It's actually only 10 days ago. Bitcoin got up to $220, but we can kind of see sliding back down. It's bounced again today like everything else has, but generally sort of continuing on that move down there. And just, well, yeah, we'll go into it in more detail. Not exactly for me the best of pictures, but to be fair, that is not a standalone altcoin. There's plenty of altcoins out there that are looking just as bad. As I say, we will go through charts in a lot more detail in a moment. If you've got anything you want to discuss, question, or anything like that, feel free to drop in the chat and I'll get around to it. I didn't really get asked any questions, so otherwise we might have a relatively short talk. Hey there to everybody, and I do appreciate you tuning in. I mean, the way crypto is at the moment, I would not be surprised if there were more important things or interesting things for you to do, but the fact that you at least show up rather than catching the recording, I truly appreciate. Thank you. Okay, so let's big picture talk about some of the elements in the room, geopolitical wise, that may impact the market. Obviously, the big one here is what's going on with the US and Iran. This has been brewing now, I mean, for an incredibly long time. Threats were made about a month ago, but we're obviously seeing a more offensive or aggressive stance from the United States with the deployment of some of their naval fleets into the area. And obviously, the hothead that Trump is, he likes to say what he thinks, and he's pretty clear with what he's expecting Iran to do. Now, there are supposed to be peace talks in Geneva tomorrow, so we'll wait and see how that plan pays out. But it does feel like, you know, Trump is basically just trying to get us all used to the fact that this is going to happen. And I suppose the question then is, well, how does Bitcoin generally react in times of crisis? And you can have a look at this article in your own time. I'll post it in the chat. But I think, you know, the key thing here is, what has Bitcoin done historically in terms of military action? Kinetic military strikes, as it says. And actually, we've had a couple of instances where we have seen Bitcoin, rather than be the digital gold, in which is a safe haven, actually is very much like a risk-on asset. And we see that initial reaction is normally a move down. And that's probably what I want to get us in the mindset of. Last couple of times, Trump's always picked a weekend to do it. If he does it on a weekend, Bitcoin's the only asset, well, crypto's the only asset that's actually open. So we're going to face the brunt of those actions. Even if we get some stabilizing action within 24 hours of the strike, Bitcoin's going to be the first to react. So I expect if the US decides to strike Iran, we will see a sharp move down. I can't give you a level on that. And then it will be how the markets will reopen, or sort of how aggressive the strike is in terms of the longevity of whatever this offensive element is, should it happen. Obviously, as I said, peace talks potentially tomorrow. But I think this is something that is just sitting on people's shoulders. And I think, you know, in terms of new investors, is now the right time to move in. I think people want to have answers on where this is right now before they're starting to commit some things there. It's not the only, wrong one first. It's not the only issue that's happened in the last sort of week or so. Because last week, obviously, the Supreme Court ruled that Trump's tariffs, and we have heard Trump bark on about tariffs for effectively what feels like the last 12 to 15 months, or 12 months certainly. Now they're apparently illegal. Trump thinks he's got a way around all of those, but there are businesses that are now threatening to sue the United States government for the tariffs that they've had to pay. And it's just a bit of a mess. Trump's come out, he's sort of threatening even more tariffs on top of people. And I just think, given how volatile the markets have been with the tariffs, you know, risk on generally assets, and how that's going to affect the geopolitical structure of you know, trading and exchanges, etc. Again, I can see some hesitation in where the market is. And yeah, you know, a lot of people, we're not going to go in detail, don't worry, but a lot of people trying to see what the economic data is going to be. People talking about, you know, sort of, not systemic, but back-to-back concurrent rate drops. Well, this is now a 98% chance, and we are still 3 weeks away, but a 98% chance that rates are going to remain the same. We talked about this last week. Then, you know, you go into April's, it's an 84% chance it's going to remain the same. June is only when we get to around about 50-50. So we might have interest rates at this same level for a considerable amount of 2026, when a lot of people through 2025 were thinking we're going to be getting flash crashes, not crashes, but drops in the interest rates because the US has to refinance their debts. I understand that that's an issue, but we can only go on what is the presented to the market at the moment, and a 98% chance of interest rates remaining the same doesn't really scream right now that that is on their priority list. I probably should have mentioned this here. It's what I've covered already, but we were just having a look at sort of where the market currently sees things in this article here. It's talking about two things that we've already covered. Tariffs being a headwind for Bitcoin, in the fact that because we don't really know what's happening with the tariffs, we don't know if they're illegal or not, and we don't know how much Donald Trump's going to throw his dummy out of the pram. If he doesn't fully get his way, then that word tariff can certainly be used to rotate again. And then that stable coin stagnation. This is a bit of a different take on it. Obviously, I mentioned about Bitcoin dominance bleeding into USDT dominance. That is true. But actually, what we have seen from this year is a near $6 billion supply reduction from USDT from the market. So effectively, people cashing out of the markets. So quite a significant drop since the beginning of the year. Sorry, I was just trying to find it in the article there. Again, I'll post these in Discord for people to have a look if they want to. One of the things that, I will end up covering, and we've got to kind of, balance this out with, it's never straight 100% down or up. We always have these movements. Market makers like to make fools of us all. No matter where we are, whether we've had a capitulation event, whether we're in the bottom, or whether we're just halfway through our bear market fall, the market maker is going to still try to make money. Well, how are they going to do that? Retail greed, obviously. So everybody thinks, right, well, it's a bear market. It's time to get the shorts lined up. And so we're seeing a lot of liquidation levels building up above Bitcoin's price right now. That is just too juicy a target, in my opinion, for the market makers to ignore. They still need to pay their bills at the end of the day, and they don't want to be waiting 6 months to cash out on that one there. And so we'll have a look at it in a moment, but just looking at sort of open interest, looking at liquidation levels, etc., there is an argument to be said that actually perhaps a short squeeze is on the card. We talked about sort of potential moves back up last week, just to sort of really mess around with retail, get people excited again, and then flush it back down. I feel like that is probably a play that we need to consider. And I'm going to show you two charts. So this one here, they're exactly the same charts, but it's a different time frame. This article was written around about 12 hours ago, and you can kind of see the argument that they were making. I can't draw on this, annoyingly. The overlay drawing doesn't work, but you'll see in a second, aren't they? Let me stop that. Sorry. So what I'm sort of circling here, we've got the red dotted line was where price action was at the time of this article ultimately came out, which is kind of where price was, where price is now. But you can see to the right hand side of that, there's these bars that are sort of building up the levels. You can see 66,000 through to around about 72,000. There's a decent amount liquidation levels in and around that level, approximately $6 billion worth if we get up to that level. What was interesting, though, and this is why I sort of mentioned it, is just look to the left-hand side of that red arrow. You can see very close to where price was at the time this article came out. There was a decent amount of liquidation levels very close to price. And lo and behold, when we have a look at what happened, we had that sharp move down to 62,500. What did it do? What's missing now? That big skyscraper of liquidation levels. Market makers just wiping that out, and then moving price to back exactly where it was really on the daily open. And we can kind of see now, and I can draw on this one. So this is now gone. So that's disappeared. But this is all still here. And I feel, given what I showed you on that first chart, sort of bouncing down on previous support, we're going to have a look at fib levels later on as well. There's a decent amount of liquidity to be found from people that have tried to short this market, that I think market makers will try and take an opportunity to wipe, if not everything of this out, a decent chunk of that, and then perhaps continue on the way back down. Again, doesn't really give us a time frame to play from there, but I think it's just something to be cautious of if you are trying to short the market at the moment. Having a look at Bitcoin's price then on the 12-hour time frame, And the reason I sort of talked about support levels, but we also talked about fib levels, is just to now have a look. So not only was that 62,500 level, 62,500 level, a support and resistance from way back when, but actually it's a 618 of this long-standing fib level that we've had. We've seen that nice bounce from that. And for me, I know it's only on the 12-hour, but I think there's a move that can be had there. Now, there's a fib level in the way as well as an EMA. I talked about that 72 level, which is actually at the 20 EMA. But there is the 10 EMA, which has kind of controlled us, let's be fair, for the last week or so. But a move back up to sort of 67,500. So still another 5% move from where we currently find ourselves right now. I think I wouldn't call it a foregone conclusion, but I think that's a fairly high probability event. I still think for myself, we may see that breakthrough there, just a retest of where this 20 EMA ends up, tying in with it in and around that $72,000, $71,000 level before we just continue that range and see where it goes. Obviously, the absolute dream would be a retest of the 50 EMA up here. That's going to take a big effort. I think that's going to take things like a stand down from the Iranian tensions, a positive outcome for the markets, or at least a confirmed outcome for the markets based on the tariffs. Perhaps, we haven't talked about it, but we will. Nvidia, they have their earnings call tomorrow. Positive earnings call and a positive market reaction from Nvidia's earning call, which is after the market close, US market close tomorrow. So certainly something to look for tomorrow night when we go there. So I'm thinking 10 EMA around about 67. Maybe we get to that 72, which is 20 EMA, top of the range that we've been working on for the last 2 weeks now. Kind of starts to make a bit of sense. What happens after that? Well, we just have to keep monitoring those levels. Talked about them on Friday. If you want to just step away from the chart, 62,500. We're below that. We've got some problems. 72,500. We're above that. We can start getting excited and talking about 80,000. Outside of that, if you want to dip into your toe into trading, there is some volatility here that we can try and take advantage of. We're going to talk about pipping later. That's been a bit of a wild one, but it is the only thing that just seems to be defining the market right now. On Friday, what we actually ended up doing, though, is we had a look at the fib levels going from the very bottom of the bear market in 2022 to what we perceive to be the bull market blow off top, in inverted commas, and just seeing some fib levels that could perhaps give us an idea of where price could go. Appreciate not everyone watched on the Friday, so I just wanted to put this chart back on there. And the reason I do it beforehand, I didn't go through this on Friday, but if you just have a look at a couple of other cycles. So if we have a look at the 2017 cycle, so bottom to top, and just look, where was the bottom? The bottom hit the 382 perfectly. Okay, so one of the three not the golden, but one of the three key fib levels that we're looking to try and attach. So, big picture, massively drawn over multi years. It just happens to come down and find its bottom on one of the three big levels. We draw the next one. Hopefully you can see this all. From the bottom there to the top, and attempts to save the price before it falls down. Similarly, the 236 here for months acted as support around about that 6,000 level. So it's tying in quite nicely. And then here we go with, this one here. So these are the levels now. I'll make it bigger. That was just to sort of prove a point there. We've had that move down. The 236, I mean, it did try and act. Obviously, it didn't hold very well at 77. But now we're looking at where can we find that bottom. Again, no guaranteed time frame on when that could be. If we're going to expect a 70% drop or more, probably looking closer to the 618, around about 35,000. If we're looking at the 0.5, that's going to be about 44,000, 65% drop. Or if we're looking at the 382, pretty close to where price is at the moment, 55% drop from the all-time high at around about 57,000. Now, all of those have important features within them. So the ranging period we had in 2024, the base of that, roughly speaking, 55,000. Then we had 44,000, which is pretty much what happened when we sort of launched the ETFs. It was around about 40,000, but we can kind of see during that initial launch period, there was a bit of resistance there. And then we've also got this 35,000, and there's just a nice green vector candle there, which on the weekly time frame, should we get there, could be quite a juicy way for it to go. So certainly something to bear in mind for those of you that didn't catch it on Friday. No guarantee that any of this will happen. I'm still thinking 4-year cycle. I'm still thinking bottom somewhere between September and October. And I'd be looking at some of these. And I suppose for me, maybe it's a case of just putting, a buy order in at 35,000. If we fall down there, great. I'll be watching the charts every day anyway. But maybe just sort of setting some sort of, I don't really want to leave that much USDT on an exchange for that amount of time. I think I'd rather watch it. But just have that as sort of in my head as a level to potentially go for. I'm not going to DCA in from 56. I want to see what happens at 56, if I'm perfectly honest. I think there is a bigger drop to that. If I personally believe it, I think more realistically, it's going to be around about that 40,000 level, just sort of, as I mentioned on Friday, poeticness of getting back to the level where ETFs got in. Every single person that's involved in the ETFs, if they're still holding underwater, kind of feels like the level of not justification, but sod's law that we all experience in these crypto markets. Good for retail to pass that on to institutions and feel that pain too. Someone asked me about the 200 EMA. So obviously I have the 20 and the 50 EMA up there. The cross, we talked about that, got out because of the rejection from it. And then it was last week we were holding the 200 EMA, which we have now lost. So again, we've lost it in previous bull markets. That's no necessarily surprise. But someone was like, Harry, they've drawn the EMA, and it looked nowhere like that. They've drawn a moving average, but they've drawn the SMA. So there is that to consider, and I'll just get rid of these so we can be clear. But just to clear it up, so the simple moving average, you're right, has the 200 EMA around about 60,000. If that's what you want to use, that's absolutely fine. I typically just use EMAs. There's no right or wrong answer necessarily with it. Just be consistent. That's all I would suggest. But that is correct. The 200 EMA, for those of you that are saying, no, Harry, it should be down at 60. It is currently sitting at just under 59,000 right now, which is kind of tying in quite nicely with the base of this range period there. But I accept that. One of the things that, whilst I was sort of drawing that out, which I kind of found interesting, for those who are at the cuddle, we had the what's it called? The Wall Street psychological cheat sheet, which everyone typically overlays over the 2017 market because it just kind of works quite nicely. I can't remember to bring it up, but you've probably all seen it. Well, I actually did it again and gave my views on where it was over the 2025 bull run. And I think that worked quite nicely. But then it got me thinking about, well, what's happening with this bear market? What's happening with this drop off? And the reality of it is, when you look at the chart like this between 2021 market, 2025 market, I think there's a lot of similarities, a double top, as we've seen here. We've got some sort of neckline, which is now breached, and we've started to make that move back down. But I think we can, and I appreciate that, it's never exact copies, but markets certainly do rhyme. And I don't often use this as a tool, but if we did take the bars, we just draw it so they are sort of a similar kind of size. Yeah, the pattern there. We bring it over. I think we'll try and put some sort of logic into it here. And we can kind of see, let's not worry too much about where this pattern ends, but you can kind of see that actually we've had that fall. We had sort of a bit of a ranging period with a move up, which was the rejection off the 20 and 50 EMA cross, which happened in both 2022 and 2026. And then we got that. And the issue is that right now, it's going to be the same color, so I need to... We're in this phase. Yeah, I knew it was going to be the same color. Don't worry, I will change it. We're in that phase there where there's actually some sort of move down, and we've started to have that move down. But even back in 2022, we had a half a move down. We had a bit of hesitation for about a month, and then we followed it through with a further move down. And I suppose this is what I'm worried that we're actually steering up for, is just sort of finding that pause at the moment, getting the naysayers who don't believe in the 4-year cycle to say, right, we've bottomed now. Now it's time to move back up. And then actually what happens is we just continue it down. Now, this is obviously the weekly time frame. Plenty of things can happen within the week. But this is kind of where I'm sort of seeing this going. And I suppose the worry, there's no guarantee it's going to come down there. This is sort of suggesting 41,000 as kind of a level. Where's that kind of fit? And the 0.5, I suppose, at 44, maybe we would kind of wick through it, but there's some sort of element that you could consider there. I personally, I'm not going to leave this on the chart. I just thought it was interesting that we're following a pattern that we followed before, and it's not quite the same as 2018's, but you can obviously sharp fall down, recover. We had a couple of attempts at that, and then this element down here actually stretched out far longer. But even that, I suppose, there's some similarity. If I can just squint your eyes a little bit in terms of, we had the move down, a little bit of ranging with a move back up, comes back down, ranging, and then a final drop, and that's same kind of thing. The little bit of ranging here and then that drop. There is some sort of similarity there too. So perhaps we've just got to accept that there is that next leg down for us to unfortunately deal with. And when we're thinking about that, well, what can we suggest is going to be a level that we might want to have a look at? And I was watching some videos this week, and I thought there's some interesting data points out there. And I'll caveat this because we are going to talk about some on-chain data. The on-chain data didn't work for the bull market top. So there's no guarantee it's going to work for the bear market top. And as I mentioned in that cuddle video, we've got to take that with a pinch of salt. We shouldn't make decisions solely based off the on-chain data since it let us down, but maybe it can just give us some sort of guide to at least start to switch back on if we're starting to see that. So I've got three lines on the chart at the moment. They're not EMAs. They are the orange line being the realized price. So that's basically the average BTC holders cost. Okay. So the average price paid for Bitcoin as it stands at the moment, around about 55,000. Then we got the CVDD, which is the coin value destroyed days. What that really is that's kind of like long-term holders. So, people who buy Bitcoin, they hold on to it, and for however long they hold on to it, it accumulates days in inverted commas. And then when that sells, those days get destroyed. And so what this, for me, is trying to show is this is showing a long-term holders at like a value level. It's not an average price, and it's not the average price they paid for it. But if it gets that level and then they start selling, you could almost say it's them capitulating, them sort of saying, right, we're losing value on how long we've held this for. So it's probably time for us to get out. So there's that level there. And then there's the delta price. And the delta price in the past historically has actually shown where the bottoms are quite nicely. And we've got as I say, at 55,000, 50,000, and around about 43,000, quite similar with some of the levels we talked about before. But if you just go and have a look at sort of 2022, we can kind of see, so the red line being the bear market bottoms. So we can probably agree that actually that hit the bottom quite nicely in two instances, June and also November, picked that quite nicely. We've got this long-term holder, which it does come down to impact and touch on. Now, obviously FTX happened and that drew that price down quite severely. Some big players got hurt within that one, but that really shook the market up after a year's worth of falling. But what a point I'm trying to make is between these three lines is we get a picture of where the bottom ultimately ends up forming. We go back to 2000 and even 2020 with COVID and what happened there. Kind of see we flirted in and around that, came all the way down to the base of the delta price. But we found something short term, obviously, not really being classed as a bear market, but that extreme capitulation event found within there. And then ultimately, here we are, 2017. Okay, it did dip below delta. I have to accept that. But when we're talking about it, 3,100 to 3,400, so $300 difference, grand scheme of things, would be laughing at that with Bitcoin prices now. So again, the bottom is forming within these three areas. And I suppose that's the point we're trying to make here. We don't know what it is, but if we start tracking these, at least we can get an idea when price gets in here, we might start to feel that we're getting towards the bottom. And the fact of the matter is we're not there yet. Adding to the opinion that I have that we do have a further leg down. As painful as this has been, we haven't had that true capitulation event. And I think That's going to come. That's going to come. We're going to fall down in here, and we'll probably spend some time in here. And what will ultimately happen is we'll get close. I'm spitballing here, but we'll get close to the delta price, and then everyone will start talking about how we'll get to 30K or something. Bit like when people were talking about 8,000 when we were down, or 12,000 when we were down at 15, or when we were down at 3,100, and I kept on saying, oh, we'll go to 1,400, and we never did. That sort of thing. People start screaming that that's it. But actually what we'll end up doing is building some base in and around delta price, or certainly within these three levels here, in which we can ultimately build off from, and then shocking everybody, we'll make a fairly strong move out of those zones like we do out of each of the other bear market bottoms, and that will also end up catching people out. So again, if you're looking for an answer of where are the bottoms, perhaps it's going to take forever. Having some of these on here might just help to sort of give you an indication of where they are. Now, the next one I'm going to show you, there's quite a lot of other it's got this data on. We've got some other on-chain. Sorry, before we do that, what I did have was we overlay this here, and we can kind of see, I haven't changed it. That's just the level that it was. Back down to 43,000, as we talked about, kind of talking about that delta bottom there, but certainly having an experience in there of finding some sort of bottom in and around that range. So again, something just to consider. A lot of other stuff on here. The top half is exactly the same. The bottom, we got MVRV, which I think most of us understand where that is. We got new pools, the net unrealized profit or loss, and then we've got the pool. The pool multiple is effectively miners capitulating. And the point I'm really trying to say here, and I accept that it's on-chain data, which didn't work for us last time, but even though in all of these we are low, so bottoms are typically found when this white line breaches the dotted green line. We're low, but we haven't done that yet, so there's room to go down. Similarly, bottoms are found on the new pool when we breach this lowest poorly drawn, but blue line here, actually we've got some way down before we get to that. So again, plenty of opportunity, room to fall. And similarly, the miners aren't necessarily capitulating yet. Once we lose this bottom line, which again, we have to blow up so you can see this line here, that's when we start to find the bottoms. This indicator itself fires sort of green areas of miner capitulation. We're not at that stage yet, so it's not, miners aren't having to sell the Bitcoin they're being rewarded with to cover costs, etc. just yet. So again, there is still room, if we're to use on-chain data, to suggest we could fall further. As painful as that has been, I don't have it up, but I will now. No, I won't. There it is. And we're at an 8. It kind of feels like we're almost at rock bottom here, but unfortunately, I think we can still find further. I think we will just grow accustomed to being at this level, and despite price being in and around 60,000, the fear and greed will just start to tick back up because we just get used to those sort of levels. So I think it's just something for us to bear in mind there. Sorry, John, just put that. I appreciate with trading, it's an ever-changing landscape. What would you need to happen to convince you the bull market is back? Is there a price there? Okay, I think that's a good question to consider there. I'm just going to clear that. I'm just wondering what to clear. Let's just clear this. We'll just have a clear chart. So just remove drawing and indicators. So what do I need to say that we've got hope? First and foremost, the one thing I was looking for to convince we were in a bear market, I'm going to want to see the reverse hit of a bull market. That's the 50 EMA weekly time frame. So we need to get above 95,000 and stay above it. Okay, once we've done that, because we know above this level, bull market territory, we can then say that we're in it. Now, once we find a bottom, it does take a while for us to get back out. I accept that. But we're not talking about a 4-year cycle kind of bottom here. We're talking about a V-shaped reversal. So I'm going to need strong price action from current levels, not just to the 50 EMA, but actually building above it. And then, once we start building at, I'm just going to do it as a V-shape. Once we start building here, the other thing that we've got is starting to get trend reversals. Then we might have a bit of a pullback, find a low here, come back up. But actually, really, once we've got back above that 50 EMA, and let's say we get one opportunity to have a go at the 100,000 as well. It's a big level that. I need us to see us to break 126. That's a real big deal, isn't it? If we're to do it from here, if we're not to allow the market to just reset and for us to build an opportunity to get back in, towards the end of the year, to convince me that I'm wrong, then we need to do that. Now, that's a relative. If I wait to 95, I'm going to take a little bit of a haircut. The vast majority of my sales at 94, 91, 84, and a little bit at 64. Okay? So I'd pretty much lose all of that edge. Of course, we start moving up. I will get back in, even if I don't think it's a bull market, or I'll at least trade it. And the idea would be that a strong move through some of these levels, I'll be looking to see how it hits the 50 EMA, and it's going to come down. It's going to start coming down quite steeply, this 50 EMA. Maybe an opportunity there. So actually, by the time the 50 comes, it might be in and around 90, high 80,000s. And yeah, there's an opportunity to trade it there. But I think that's the easiest way for me to decide, actually, I'm wrong. I need to go there. I'm not really too fussed with how that interprets across for altcoins. Some altcoins are moving regardless. Most altcoins are not. And so, yeah, they'll just follow whatever Bitcoin is generally doing. In terms of anything else, probably not. I think that's just the simplest way for me. Even if we did it off the base of this, it's at 86,000. So, a couple of weeks, that 50 EMA is going to be there. But just getting back above this level, building from that and going, maybe you could start talking about an inverted head and shoulders, climbing back out. From a geopolitical kind of side, stock market needs to be making all-time highs again, which we're not seeing at the moment. Gold needs to cool down. And yeah, risk on needs to be taken a bit more seriously. I'd also then start to consider things like ETF inflows. Are people now getting excited again about Bitcoin? Because at the moment, they're not really. Let's face it. 3 out of the last 15 trading days have been black. The rest have all been sales from BlackRock. And it's starting to look very noticeable, this fall off. Now, we've still got 55,000, 53,700, 54,000 Bitcoin in the last 18 months. It's not to be sniffed at. But at one stage, it was 62. So we've lost nearly 15% of the amount of Bitcoins being sold effectively since October. So there's a decent enough fall off there. So I'd like to start to see that pick back up. But yeah, other than that, I think that's probably it. Sorry, that was pretty loud. Just one final thing, just on trading before we go on to price action. So I kind of mentioned this in the trading channel. Someone was asking about trading and Pippin, and I've been doing a bit of trading with Pippin. This is the 15-minute time frame, and when I'm trading, I'm normally on the hourly and then dropping down to the 15 and the 5-minute, and it can be incredibly volatile, particularly with just some of the reversals. Today, prime example. Okay, so I was short Pippin, didn't do anything while it ranged, waited for it to break out, long. Today, both longs and shorts. And the point I was trying to make was, one, I like to be fast. Okay, I don't like to hold trades for too long, and if I do, I've already moved my stop loss to break even. Okay, I've already taken something off the trade. I'm not going to sleep for 8 hours and leaving this open, because I can lose absolutely everything and find myself in a negative position. There's just another place to enter. But the other thing that I do, I think, with a volatile asset that's moving around quite a bit, which may be manipulated, whatever term you want to use, is if we're leverage trading, we are effectively putting a fraction of the money up front, allowing us an opportunity to, double, triple, quadruple, whatever the actual amount that we're buying, but we carry extra risk with that. And the point I think I'm trying to make is, if something is quite volatile, then why use your own money or risk more of your own money when actually you can risk the house's money? And I think that's it's the one time. So typically I sort of leverage from 3 to 5x. Pretty boring, okay? But I'm just slow and methodical, just trying to build a little bit of a pot whilst we're going. But with something like Pippin, what I've been doing is I've actually been, trading 10x, 12x, whatever it may be. And ultimately, all I'm doing is I'm putting less in. So where I would have previously set a stop at certain, dollar value or level or whatever, and it would have cost me a certain amount to realize that the trade is wrong, I'm now upping the leverage. So that's just my liquidation point. So if it's right, I gain a lot more because I've, my risk to reward is a lot more because I've not put that much in and I'm getting a hell of a lot more out of it. But ultimately, if it goes the wrong way because of volatility, and it might not be, I mean, look, I'm Pippin today. It's been long. I mean, it's been net long. It's still up 13% today. Yet at one stage today, it had a 26% drawdown. So, you could be as confident as anything. Think, yeah, this thing's just, it's long and strong. It's going great, till the bend at the end, whatever term you want to use. But then we have that kind of level of volatility. Well, just let the house carry that risk. Okay. Just put less of your own money forward. You might get stopped out from it. Hopefully you've taken profit along the way. And if it does get stopped out or liquidated or whatever, you've still got a decent sized pot so that when you move to a different asset and reduce the leverage, or you can start to have another pop at it again. But again, you get more tries at it because you're not putting as much of your own money forward. I think just having that mentality can kind of help. Now, some of you might think, well, I do a standard, it's 10x anyway, and that's absolutely fine if that's your risk. But maybe have a look at whether or not you can reduce the amount you're putting in, 20x, 25x. I mean, I'm, health warning with those. I promise you, particularly something like this, it is moving quite hard. So I sort of longed and shorted today, and I've not really found an opportunity for an entry back in yet. I've been waiting for it to sort of come back and kiss at least the 10, if not the 20 EMA. And it did it, typically when I'm out of the house, school run, making tea, whatever. So I've just not forced it. It doesn't really bother me. I'd set that target of anywhere from $200 to $400 a day, just trying to build that pot as we're doing. Hit it, doesn't matter. I'll find another trade. Maybe we get one a little bit later on. But that was just the sort of the mentality I think I was trying to just add there. Might help some of you if you're trading. If not, don't worry about it. 2026, and the only alt moving is an AI unicorn token called Pippin. Yeah, it's kind of strange. I mean, we've had some other ones move today, but this thing has just been absolutely ripping. And if we just get rid of that line, might be a bit much on here, so I'm just going to take some of these off for a second. I just want to show you. You have a look at. I mean, just look. Trying to put it on the weekly. Let's get rid of this. Bitcoin's blue, Bitcoin's the blue line. Pippin is the candles. And pretty much since Bitcoin's demise, Pippin has just absolutely flown. And we don't necessarily need to scale it in terms of how many X multiples, but you can just see how well it has done. Now, it's not immune to dropping. Look, when Bitcoin initially fell, this thing fell hard. When Bitcoin fell in November, this thing fell hard. When Bitcoin fell in February or January, Pippin fell. But whilst Bitcoin continues to fall, Pippin or Bitcoin moves sideways, Pippin is climbing. And so that is kind of why I'm only really trading Pippin at the moment. And I did this with silver, and I did this with gold, and I did this with BNB, and I've done it with Sol. I'm just going where the momentum is. And it's just a bit easier on the TA because for whatever reason, it's continuing to move. And of course, my last trade will be wrong. That's fine. And last week I got caught out a little bit with it. That's again, it's fine. It's part of the course. you'll never find a trader whose trading portfolio just goes like that. It's more like this, hopefully. So yeah, so that's just where it is with that one, but kind of crazy how it's doing. Anyhow, let's start having a look at Bitcoin here. We'll try and get through this, be done before 9 o'clock, shall we? So 10 EMA, this daily time frame, by the way, dictating where we're going. We've just been pushed and pushed and pushed. We've tried to break it. There's been absolutely no joy in doing it. You know, we've hit it pretty much every day bar one for the last 9 days. And then yesterday, markets opening, we've lost it. We've left a nice, decent vector candle at the moment. And you can see with today's price action, we've formed a fairly good low test. But what do I care about a low test? Nothing in a falling market. This could quite easily roll over tomorrow. As I say, I do expect us to come back and at least test that 50 EMA, particularly with a red vector candle, just to sort of help move that up. The RSI is low, but it is not oversold. Okay, we are still in the mid-range territory, the very bottom of that mid-range territory, but we're still there. So there's no reason why this couldn't fall back down. That being said, you know, if we're trying to find some optimism within it, we are, you know, finding in the trend at least higher highs, higher lows. Well, higher lows at least, actually, now look at it, which is replicated within the price. There's an argument that we might be forming the right-hand side of a W, but to do that, we need to get above there. Okay? This has to come up here. Price needs to get above 72,000, level we've talked about, and start building there. Then I'll be convinced that that's a W formation. Right now, though, for me, I think we're just ranging, and this is the range that we're going to work with. You saw me draw it on the 3-day time frame, and it works just as well on the daily time frame. And we'll have some sort of movement within here. And when we go on the 4-hour chart, we're ranging. We know what we like to do. We just collect vectors. And so that's where I think there will be some. Okay? So we drop on the 4-hour once it loads. And look, we've got these vectors here. I think we'll take these. I absolutely think we will collect these vectors here. Certainly up to sort of 68,000. Whether or not we get that one at 70, maybe not. But I think we will make a decent run through these. Barring Trump announcing tomorrow that the peace talks didn't work. And they're going to hit Iran. I think we will just work through these. It's not that far to go, really. And then likely we will leave some vectors behind us and we'll continue to range. And unfortunately, that's where we're going to be stuck. We had this same deal back here. We just collected vectors each time. And then when we finally lost it, obviously we never got a chance to recover those. But whilst we are doing this, then that's it. What I would say, though, is even though we're ranging, 50 EMA on the 4-hour time frame is pretty dominant. You know, we've not managed to sustain above it for longer than, you know, a day's worth. And we've not broken through the cloud. So there's an argument to be had that, okay, maybe we only experience a move up to that sort of 67,000 kind of level. We don't get all of the vectors. We get a decent chunk of them. And then we run out of momentum. We come back down and retest. I think if that's the case, we've got a problem. We're continuing the downtrend within this range. And for me, it's probably a signal that at some stage we're going to plop down through. Again, with the RSI, the 4-hour, we're in a neutral territory. It's absolutely fine. Go on to the hourly, climbing up quite nicely, actually. Plenty of vectors for us to, again, try and attack there with some EMAs and for us to approach. The 50 right now is actually holding us, which it has done since Sunday. You know, Sunday night into Monday morning, Asian markets, obviously, yeah, massive fall through. We recovered 50% of that through sort of the US. Actually, that might have been London, actually. And then US opens again, we come back down, okay? We're recovering not quite 50% of that fall, but almost, you know, around about 65,000 is 50% out of that 50 EMA. Do we then just find ourselves falling back down again? I think it's something to, unfortunately, consider there. In terms of BitTensor, okay, here we go. Back on the daily time frame, we can see that move up to the 220. I pointed out on Friday, previous level of support, but also the 50 EMA. We've come back down. We've lost the 20. We've lost the 10. And at the moment, we're just continuing to slide back down. Yeah, there's an argument made that we might bounce off this 162 level, but this candle's not doing enough for me at the moment. Again, I'm not convinced that we're not sliding down until we're back above 180, let's call it. And even if we do get above 180, I'm only really going to be optimistic for another $20 to around about that 200 level, because the 50 EMA's there. These things are holding us back. Altcoins are struggling. I don't know if Bijan put it in Discord because I've not looked at it, but he sent me it. AI related cryptocurrencies were the worst performing crypto in Q4 of 2025. And unfortunately, BitTensor was leading the pack there. And it's not done much better in Q1 of 2026. I've not even bothered talking about what Kevin and a few others were talking about in Discord regarding, totally forgotten now. I think it was Claude. Can't remember. Whichever one it was, basically being able to read, fix, moderate some of the better code that the banking system is using, etc. AI is now going to be a disruptor. It's a disruptor in the jobs. It's now potentially disrupting other sort of what we perceive to have been fairly secure systems at the moment. And that's sort of this centralized AI. I don't think decentralized has really taken it at the moment. And it's got, the decentralized nature has got to disrupt stuff that, the centralized stuff, which is taking all of that attention, all of that heat at the moment. It's got to try and find its way into that. And it just hasn't been for the last sort of 3 months or so. And given where sentiment is with cryptocurrency, with altcoins, I think we're just got to accept that we're in a bit of an uphill battle. And I wasn't trying to take the mick out of someone in Discord about, where they thought the price target would going to be in 2027, sorry. But the point is, I don't think Tau is in a position, BitTensor's in a position from a TA, from a price point of view, to do what's Pippin doing and to deflect from the market. Fundamentally, and everything it's doing with subnets and all of that, I don't know about. And I'm sure it's doing some fantastic stuff behind the scenes. My caveat is, so did Chainlink, so did Polkadot. How have they done in the bear markets? How did they do in the bull markets? For me, just because you are developing it doesn't mean that you're capturing investors' appreciation of that value, and then they're putting that value, the money where they speaks, and actually buying the asset. So that's just where it is. I'm sorry, that's my view. I know it's completely different to a lot of other people's view in the group, and that's fine. We can have those differing views. And trust me, I'll get back in. If it starts to fly, I'll buy some more. But I still have further falling on my cards for BitTensor. Going on to the charts now, looking at things like this, it just looks like a continuation down. There's no real relief from it. There's no conviction with any of these moves up. It lasts for 4 or 5 days and then it just starts to fall. Similarly here. And the reality of it is, even if we break the 200 level, we've got to break the 300 level, okay? That 300 level, let's just call it 305 because that's the Gandalf line with the 800 EMA. It's such a big ask. It's a 100% increase on where the price is from the moment. Yes, I will take advantage of that if it starts moving that way. I'll probably just trade it, to be honest with you. But it's such a big ask. But we start getting above that, we're breaking some trends, and maybe we can start moving. But even that, with a big picture, I know you're bored of me talking about it, but with that level there, it's got to get above that. And it might take that long to do it. Actually probably take longer because that's only this year. But I think that's where to go. For me, I kind of see maybe sort of moves up here and it just continuing down. That's my honest opinion. And then, as I say, we are at last line of resistance and suddenly we're looking at double digits. That being said, let's clear that. A lot of stuff on here. Let's just clear all of that drawing. So zoom in, see what we can actually see on the lower time frames. I mean, what can I say about what I personally see here? There is, over the last sort of 2 days, we've seen a sort of a bottom forming in and around 165. We're starting to build from it, but we're really just retesting the 10 EMA at the moment. But even on the 4 hour, okay, we've had experiences above the 50 EMA, fleeting as they were, but even when we got up here, Nice M formation, restricted by that 200 EMA, and we've come back down. I will be granted that we've basically just fallen 50% of that climb, and we're starting to build a pattern here. So okay, that's great. Now proof's in the pudding. We've got room to the upside on the RSI. Let's start to see some of these green candles again coming through. Let's cross this 50 EMA with a green vector candle like we had here. Okay, and then let's start moving up, building, and then have that battle. But that battle, as you can see, is 193 at the moment. I mean, even on these, it didn't actually break above. It breached it, but it didn't stay above. So I think there's some work to do there, if I'm being honest with you. I don't think the hourly is going to be any different, I'm afraid. Pippin, I would say, go against Pippin at your peril at the moment. Today, what did it really do from a daily point of view? It just retested the 10 EMA. That's it. That's all it did. And now look at it. It's 25 cents higher than where it dropped down to today. Okay, it got down to 63. And we're now at 85, new all-time high. And I don't know why this has suddenly captured the imagination, but it has. Obviously, we've got to be cautious that there is a bearish divergence with the RSI. But that could play. We don't know how long that could play for, but it could play for a while. So, unfortunately, we'll get an opportunity at some stage for it to reset. And we'll look to play it. And, I still curse that stop loss I put at 16 and a half. It is what it is now, but that would have been a hell of a play. I would have got out of it well before then. Don't worry. But yeah, I think this will just continue to climb, to be honest with you. I will look for another long entry. As I say, I will hope. I'd love a retest of the 50 EMA on the hourly, but I'd be looking for the 10, the 20, maybe some sort of laddering element within there before making that move. But again, even on the hourly, we can see there's a fairly decent. I can't do it. Why won't this let me? Bearish divergence. So it's across multiple. At some stage, I expect this to flash and to reset like it did here, and it reset around $40 cents even. Jesus, $40. We're having some move there, and maybe we just have to be a bit patient. And if that's the case, that's fine. Let's have a look at some of the other things. We'll just stick to the daily. Let's go with Ethereum. It looks exactly like Bitcoin, except for we've got a little bit more action to the downside because we've got some vectors very close to where we currently sit at the moment. As I said, Bitcoin continues to fall, even retesting 60,000. I think this thing is going to go lower than it's been this year. I think we will be getting in and around that sort of 15, it's nearly just sub 16, even down sort of 1500 levels, the lows that we saw from the tariff. And I don't have much faith in what Ethereum has done all cycle. I don't want to give any estimates of where I think it could go. I know some people have been talking about, retesting the lows from 2022 and below. But I think it's, maybe it's run its course. We'll have to see. BNB, again, looking pretty turgid. It's actually, whereas Bitcoin had a base, and this is what a lot of the alts are like at the moment, this has broken its base, and we're now trading down, and we are, we're on borrowed time, daily time frame. We're below every EMA now. All those amazing gains it had last year, all lost, and we're now talking about some of these lows. Now, we've still got plenty of time. There were times when we were talking about sort of $200, sub $200. So we've got plenty of time for this to run. But unfortunately, I would say we've got a base of around about 530. And then after that, maybe down to the 400. Casper sliding down as the others. Link doing exactly the same. You get a pattern here with how things are looking, I'm afraid, which is why we don't really talk about them at the moment. Near sub $1. Solana's below 80. This could be a good pickup, bottom of the bear market. Still got utility within the meme game, but again, very much dictating there. Everything's crossing now, so that everything is in the worst possible position. The 800 has finally crossed over the 200, so now it's got everything to work for. SPX doesn't have an 800, so everything is lined up in a negative way. XRP, yeah, people thinking that was going to $10. Very similar to what Bitcoin's doing at the moment in terms of hasn't quite got down to the lows that we saw early Feb, but it's being controlled by that 10 EMA. And Zcash, I mean, not as bad, but it was 760 back end of last year, and now we're 246 was 66% down on that. It's quite a move. No surprise, Bitcoin ETH is struggling. Others versus BTC, it's actually up a little bit. Why is that? Not sure. I'm not sure. Others is sliding down. I'll have to look into that. I mean, I know there's a lot on this chart sometimes. But it feels like that head and shoulders is playing out there. And if that's the case, I mean, we are drawing this very roughly. That could be down to bear market bottoms that we had in December of 2022, which just goes to show, it has been that same liquidity that's just been sloshing around. And the reason that actually alts have struggled is it's no longer 35,000 tokens, it's 35 million. We've made that point plenty of times. USDT is dipping down. That's, people probably exiting the market, which it does in bear markets. We see these moves down. Just like everything else, total to, yeah, okay. VIX, Dixie. Sorry, I'm just kind of NASDAQ, that non-volatile or non-directional volatility. It's there, and there are certainly people drawing parallels at the moment that is that the next move down. I certainly think it's worth watching. I've taken all the indicators off. I can't be bothered to. The S&P, this is the thing, is this is close enough to recover quite quickly. It's not panic, sell every stock you have, but it's certainly, let's just keep an eye on what's going on at the moment. I mean, we could have a drop down to the sort of, I don't know, even 6,600, which is going to feel absolutely violating, but it's still continuing that sort of uptrend. It's just how long you can hold on to your nerve waiting for that to go. So it's doing that sort of non-directional volatility, yet we haven't really made a high in a while. We could be on the precipice, but we're close enough to the top to at least have a bit of hope. It's not like we're staring at a Bitcoin chart. We are relatively close to all-time highs there. Gold and silver seem to be working their ways back up quite nicely. Part of me is like, do I just have a small long on a couple of those? Because if we do have some tension in Iran escalate, it's probably going to help gold and silver quite considerably. And then, we've got some of the stocks. They're just individually not looking great. Nvidia has been climbing, obviously, as I say, tomorrow, big day for it. Just double check it is tomorrow. Yes. Not quite all-time high, but it's not had that slump. It's doing a bit better than most of them. It's been, to be fair to Nvidia, it's been piggybacking or carrying everybody for the last few years now. Palantir, we are out of, and I feel like it's tried to make some efforts to climb back up, but it does feel like it's falling. Tesla's doing good. Coinbase, MicroStrategy getting very close to danger zone again. Astrid, I think. I don't know. It's hard with Astrid. I appreciate we are. I'm just wondering if that's a base support Kobo. I don't know. I think it's maybe to just keep an eye on. But I think there's some possibility there. 50 EMA is down at 15, so maybe we just pull back to here, see some sort of bounce. I know there were figures that were mentioned for initial investors. Maybe they just took an opportunity to once they hit to sell. We'll see. Smart web company since launching, like every other IPO, just sliding down, and tariffs is down there. I think that's kind of it. I didn't bother talking about IBM, but as people pointed out, Worst day of trading, 30% down, worst day in 25 years. Tried to make a bit of recovery, not really gone and done it. AMD's had a good day today, though. I'm not sure what the news was on that, but it has had a good day there. So interesting to see how that's going to play out. Anyway, I have rattled on for long enough. Oh, sorry, let me just catch up on some of these. Dead cat bounces in alts usually end up with lower than people expect. I believe that. It's why I'm not in them at the moment. And I know that's not what people want to hear. They never go as high as you want. They never obviously go as low as you want whilst you're down there, but they will go lower than you initially expect. You know, people don't believe that 85 to 95% drop. It happens. Again, Bijan, you put something about Filecoin and how aggressively that has fallen. And the crazy thing is, some of these tokens, you know, I mean, where's Filecoin? I really thought I was going to come across. There we go. If it wants to load. I mean, at one stage it was $154. $154 in April 2021. It's now less than $1. I mean, come on. So, yeah, they will go lower than you hope, well, not hope, but expect. Issue with ETH, it lowered gas fees. The biggest mistake ETH ever made, in my opinion, was going from proof of work to proof of stake, because that computational power that it lost, it could have been an absolute powerhouse, but it went green. Go woke, go broke, isn't it? So yeah. Let's have a look. USDT is strong. Yeah, dominance is strong. That is. Filecoin is worth 1.8 billion, generates $4. I saw you post that. Yeah, doesn't even buy enough to buy a latte. Yeah, exactly. So I think that's it. You know, and this happens in bear markets, and I'm just as to blame as everybody else, that people really start to pick apart the utility of altcoins in bear markets and justify, well, how can they have these huge valuations when they are bringing in absolutely no revenue? And I think there's a valid argument there. As long as you're not married to your token, there's an opportunity to, you know, take advantage of hype in the right market conditions, and then ultimately try and get out. But a lot of altcoins have failed still, you know, 4 years on, to prove a genuine utility with a ongoing consistent revenue stream. And, you know, we'll just see how some of the newer ones that weren't around in 2021 navigate this bear market. And then, you know, we can assess that in 2027, hopefully. Anyway, that's it. I appreciate that. Look, they're not particularly enjoyable calls at the moment, live streams, whatever you want to call them, because the outlook's not great, and all we can really do is either stay with the conviction that we have of why we're in these tokens that we're still in, because the fundamentals you believe are strong, and that's absolutely fine, you know, or we can say, right, is there an opportunity here for me to try and be a trader? Okay, take advantage of it, because ultimately, if you're a full-time trader, it doesn't matter if Bitcoin's at 64,000 or 164,000. There are opportunities to be had to make money, and instead of actually being married to the token, you're married to the job of trading, of being disciplined, of losing that love for it and actually appreciating it for what it is, an incredibly volatile asset. So are some of the other ones, in which with discipline you can make some money from. And I am not preaching from the choir here. I make oodles of mistakes still. I promise you that, okay? I do. There are days where I think about just packing it all in. I really do. And that's fine. It's part and parcel of, can you just get over it the next day and move on again? You're not going to get everything right, but there are opportunities to at least try and make some money from here. And bear markets are like that. You know, there are still opportunities to be had. Yes, we can all lie in the corner and lick our wounds, try and work out what went wrong. That should be done anyway. But why not try and make some money at the same time? And that's it. So with that in mind, I don't think I was a bit confused with the message from Sam. From what I gathered from it, there is no trading pub on Thursday. That's what I understood, because he's traveling. I'll still be around Friday, 10 a.m. We'll do another charting one. You know, it may look very similar to this. We'll just have to wait and see what happens. But you know, we'll be there to at least have a discussion about it. And just remember those big picture numbers. 72,000, 62,500. We're in that range at the moment. We're at the bottom half of it, potentially expecting a move up to the upper echelons, maybe not as high as that. You see price above 72,000, open your charts up. Maybe there's something exciting to do. Price below 62,000, open your charts up. Might be time to dig another foxhole. Other than that, I will speak to you all soon. Got any questions, tag me in it, message me, give me a call, whatever it is. I'll try and help you out on an individual basis. Other than that, I'll speak to you all soon. Cheers now.